Hey friends, this is Gerald and welcome back to another video. Today, we're going to be talking about why I think the US stock market is gonna crash soon. Alright, so if you're new to this channel, we talk about finance, about managing your business, so that you can basically grow your money and unlock the chains of money. You know, like living for someone else because you need money, that kind of life. It's horrible, isn't it? And if that sounds good to you, be sure to hit the subscribe button and join our community. Alright, so let's begin. So for those of you that don't know, I buy mostly US stocks because the market is a lot more visible. You can find a lot of company information and companies there tend to explode a lot more quickly because just expanding within US is much easier kind of compared to Singapore. Although I still look at some Singapore companies and I haven't been very diligent ever since I started my job. Right now, US stocks are at like an all-time high, pretty much at an all-time high, and that is weird. So why is it at all-time high? I think a couple of reasons that support this. I think first was that this week, a lot of companies are reporting record profits. They're making so much money, it's not even funny. They break like all analyst expectations. Even OCBC in Singapore recently broke analyst expectation. Mind-blowing. So that's first. And secondly, the US unemployment data is looking fantastic. Like I think right now, I mean it's not fantastic, but it's looking good, healthy. So I think it dropped from 7.9% to 7.6%. Previously it was like all-time high. Even though 7.6 is still really high, it's looking healthy, right? Market's getting back to where it was before, and the market seems to just somehow ignore COVID-19. So market, boom, all-time high, right? But here's the problem. If you don't know, you can get $100 worth of free stocks in Singapore and 5 free trades if you sign up with Tiger Brokers. Link of the promo code in the description below, so do check that out. And speaking of COVID-19, well, recently Dr. Scott Gottlieb, the former FDA commissioner, what he said on CNBC was that, you know, if you want to control COVID-19, there's two ways to do it. First is targeted mitigation, so like, you know, contact tracing, very aggressive contact tracing in targeted areas. And secondly, to lock down or shut down, right? And if you look at all the countries in the world, countries that have tried, countries like Singapore, China, we did very aggressive shutdown, and that, you know, managed to keep cases low after like 60 days. Even Australia, they wanted like 60 days shutdown, but in the end they extended it to like 111 days before they got it under control, 0 cases. And if you look at other countries that didn't do shutdown, they tried to do the mitigation, targeted mitigation method. In the end, France, Italy, UK, they seem to have, you know, implemented some sort of shutdown again. So therefore, targeted mitigation is not so simple. That's first. Secondly, the US is not doing either of this. So why? Because elections coming up, everyone's busy. So that's one big problem. And what does this mean for COVID-19 in the United States? One word: explosive. In fact, what Dr. Scott Gottlieb said was that right now, US has about 120,000 cases per day, which is insane, by the way. The reporting rate is only about 1:5. That means that there's about 500,000 cases estimated per day in United States. And what's even more scary was that back then when COVID first started, you know, US stock markets, it was, you know, the cases were situated mostly in New York City, where it can be contained a lot more easily. Right now it's spread like throughout the whole of United States. You know how much tougher it is to manage an outbreak that's like throughout 50 states. So that's really, really, really scary. So the next thing we are expected to see is a rise in hospitalization, which is really terrible for the United States and the stock market. So if in the event that shutdowns do happen, horrible. Hospitalization rates, you know, skyrocket, which is to be expected, horrible. And this also means that, you know, as Singaporeans, we're gonna expect Singapore's phase 3 to be extremely long. So for those of you badminton coaches out there, good luck. It's gonna be really hard. I understand, I empathize how it feels. Really difficult times. Okay, so the next thing we notice is that unemployment rate could also rise very sharply in the United States. Why? Because business support is running out. Why? Because, you know, the end of the CARES Act happens in, I think, 31st of December. So that means, you know, if you've been running a business for a while and working in like MNC, you would know that this year is actually a fantastic, inverted commas, year for a lot of businesses. Why? Because a lot of the government grants is actually supporting the businesses. So there are some businesses that are very affected by COVID. So those businesses would suffer, they need most of the support. And there are some businesses that are not so affected by COVID-19. And those that are not really affected, business is blooming right now because cost is cheap. Government is paying for you to hire people, to train people. Imagine government pays for half of the staff salary. Aren't you going to report record profits? Makes sense, right? In fact, a lot of my friends in Singapore, I have a few friends that drive Grab. They're making more money taking government grants, the $3,000 monthly grant, compared to when they were working. Like they could buy a new PC. I was like, what? Government grant is going to end, right? The 3,000 times 3 months ends this month. So yeah, it's insane. People are making more money this year, some compared to pre-COVID, which is going to end. The grant's going to end. So that means the next year, ho ho ho. So now if we turn our eyes over to the Fed, it seems that the Fed is desperate. So why do I say the Fed is desperate? Well, if you look at what the Fed chairman, Jerome Powell, what he said was that he sent a very clear, strong three-thing kind of outline for the United States. Number one, maximum unemployment. He wants to reduce that unemployment rate to about 4%. Right now it's still about 7-ish. Number two, he wants inflation to be at 2% and that other people's or the market's expectation of the inflation to be 2%. And number three, this means that we can expect inflation to be over 2% for a period of time. So for the Fed to list 1, 2, 3, right? If you've been watching a lot of the Fed updates, you would know usually the Feds or MAS, they are very, a little bit unclear, subject to interpretation, their statements, right? So for them to be okay, here's 1, here's 2, here's 3, that is a sign of I want you to do something or feel something. So they want to make markets think in a certain way. They're desperate to do something to the market, kind of. So that's how I interpret things. So if you disagree with me, just leave it down in the comment section below of what you think. Again, for all the things, I'm going to leave a description to my sources below, so do check them out if you want to learn more about it. And if those two, COVID-19, the grants and support, is not scary enough, here's the killer: the political gridlock in the United States. Boom! So what do I mean by that? So according to a TED Talk by Van Jones, right? You see, when a president or a potential president candidate loses the election, right? They can choose to contest the election or just to give up and say, you know what, you won, good job. Let's all unite as United States and move on with our lives, right? The thing is, no president has recently, at least in my lifetime, contested the election, right? But Donald Trump has made it extremely clear that he wants to contest the election in the event that, Joe Biden wins unfairly.
If you count the legal votes, I easily win. If you count the illegal votes, they can try to steal the election from us. We think there's going to be a lot of litigation because we have so much evidence, so much proof, and it's going to end up perhaps at the highest court in the land.
And what does this mean? So Van Jones kind of broke it down such that basically it could potentially mean fall in democracy. Why? Because at the end of the day, long story short, because of some rules, it could lead to a situation where there's the swearing in of the president is delayed for a couple of months, and that also means grants get affected. The fight against COVID-19 gets affected. And last but not least, the recounting of votes would not or may not become democracy, meaning to say that what he mentioned was a scenario where it becomes like the individual states that vote, or each state gets one vote to vote for who becomes the president in the new contested possible scenario, doomsday scenario that happens.
That the whole matter just winds up in front of the House of Representatives for the first time since the 1800s. It's like the election never happened. Individual Congress people don't get to vote. It's done by states.
And when that happens, and it seems like Donald Trump might be pushing for that scenario, we're going to get a lot of civil unrest, lots of problems going to come out. And can you imagine what that does to businesses in the United States and throughout the world? Scary, really scary. Because if you look at who is voting for Donald Trump versus who is voting for Joe Biden, it seems that a lot of the smaller states, like the more rural area, they tend to vote for Donald Trump, and the big cities, right, which is all concentrated in one area, they are voting for Biden. So it's very red with few blues in a lot of the contested states that we are seeing right now, the 4 key battlegrounds, right, 4, I think, battlegrounds. So while I'm not like leaning on whichever political side, I see the potential risk in the market right now, and I think you should too. So question is, what can we do as investors about the market? It's so scary right now. So what I did was that I actually shorted the market. That's right, I kind of like, you know what, throw my heads up, it's the peak of the bubble. I'm like, nah, it's not gonna get a lot better. Things are gonna get worse. It's gonna be like Feb again, I think. So that's when I shorted the market. And again, I would advise you to don't do it if you don't understand how shorting works, because you are exposing yourself to unlimited losses. And if you don't intend to kind of watch your positions very closely, very dangerous to short the market. So basically what I did was I put like a very small percentage of my portfolio, 2% of my portfolio, betting that the market will go down. So in the event that it goes down, it goes down. And I also did like a stop loss to cap my losses. So just bear in mind, that's what I did. I'm betting that the stock market is going to go down because I feel that the outlook looks extremely terrible. So that's what I think. I don't know what you think. And if you would like to talk about the market, I invite you to join me in my Telegram group chat. So I'm going to leave the link in the description down below. I think things are going to be terrible. So for those of you Tesla fans out there, seriously, be careful. Unless you know what companies you're looking for, you can go Warren Buffett style and say, you know what, this company is undervalued right now and the business future prospect is going to be fantastic. You should still buy, but bear in mind, if the market goes down, you need more gunpowder to be able to buy more, right? So don't put all your eggs in the market right now, unless you're absolutely certain with what you're doing. So that being said, join my Telegram group chat. I never knew that I can build like a wonderful community in the Telegram group chat. It's like 10 people strong right now. So if you like my video, be sure to hit the like button, subscribe to my channel if you haven't already, and do check out my other videos over here or here, and I'll see you next time. Take care, everyone.